Why does the price trade in a channel? Frequently, could be because they're waiting for something, right? The market could be waiting for some sort of economic news to hit. It could be waiting for some sort of earnings report, a speech from, a Fed governor or someone along those lines. So there are many reasons why channels form, and usually it's because the market's waiting for something to happen. And when that event finally occurs, we usually see some pretty big breakouts. So we're going to identify a channel on the 5, 10, or 15-minute chart, and we're going to enter long as the price breaks above the upper channel line. Our stop will be placed under the upper channel line, back inside the channel, and we're going to trail the stop higher as the price moves in our favor. Now, anytime you're placing a stop, very important, and we're going to cover more about risk management and stops later on. Anytime you're placing a stop, you may not place that trade if it entails too much risk. So if the price blasts out of the channel and you enter, and it's too far from your entry to place the stop back inside the channel, then you're either going to have to not place that trade or put that stop closer, because risk management is going to overrule everything else in your trading, and you'll see why later on. Okay, so anyway, we're entering long as the price breaks above the upper channel. Our stop is inside the channel. Also, if the channel is narrow enough, we could actually go under the lower channel line. Think about it. If the price has been contained in a narrow channel, the price takes off out of the upper end of the channel, and if that channel is narrow enough, if it doesn't entail too much risk, again, we can actually place it beneath the lower channel line, and we'll take a look at a chart here to see what it might look like. You can see that in this chart, the price is moving sideways for quite a while here, and what's actually happening is this currency pair is waiting for an economic indicator to hit. I believe it was non-farm payrolls in this case. You can see that there's a very narrow channel, and the price is going to break out of that channel when the news hits. And since the channel is narrow enough, first of all, we want to enter when the channel's exceeded. We're going to place our stop back inside the channel and maybe even underneath the lower channel line if it doesn't entail too much risk. And you can see, of course, obviously, if the trade is going in your favor, you're going to want to trail that stop. You can get some pretty powerful moves off of economic indicators, which is why they can be very tempting to trade. It can also be very dangerous to trade if you're not experienced. So certainly, anything that we talk about today, any type of technique that's new to you, you need to do it in a demo account, right? There are demonstration accounts available at FXCM. It's exactly like the real thing. You want to use that first. You want to trade in that demo account. Any technique that's new to you, you want to do it 20, 30, 40, 50 times in the demo account before you try it with live money. And make sure that you're very, very comfortable with it first, or else don't use it. This is very common. It's very common to lose money trying to trade a new technique because there might be one nuance that you're missing. It's not quite right. So make sure that you practice it. And at FXCM, you do have the ability to practice trade without using any real money. I want you to take advantage of that. Let's take a look at a short setup on the same trade. We're going to identify a channel on the 5, 10, or 15-minute chart. We're going to enter short as the price breaks below the lower channel line, and we're going to place a stop above the lower channel line or above the upper channel line if it doesn't entail too much risk. And of course, we'll trail the stop if the price moves in our favor. Try to turn it into a big winner. Let's look at this on the chart here. And again, this is pound US dollar, and the price is moving sideways at the London Open here. Now, this is a little bit different from the Big Ben setup we saw earlier. Why? Because what happens here is the price just sort of blasts out of this channel, and we see that it really takes off and really falls pretty sharply. You're going to see that there are a lot of ways to trade that London Open. There are a lot of opportunities to profit. Big Ben's just one way to do it. There are many variations on that technique. Anyway, you see here what happens. We have the narrow channel. We break out to the downside. Our stop's going to go up just above that lower channel line. If it doesn't entail too much risk, we'll even put it above the upper channel line. And of course, as it goes down, we're going to trail that stop down in our favor. And that's your channel breakout in a nutshell. What I want to talk to you about next, let's moving right along here because we have a lot of ground to cover. We're going to talk about multiple time frames. And what we're doing here, we're going to identify opportunities using long-term charts. We're going to use longer-term charts to try to determine direction. And then we're going to pinpoint our entry using a short-term chart. And there's very specific ways that we can do this. By the way, this is for anyone who has ever been told trade with the trend or the trend is your friend, but they didn't know how. This is going to explain to you exactly how, and this translates over to stocks, it translates to futures, and of course it's very effective in the Forex market as well. Okay, just a brief recap. We're going to use a daily chart to determine if the currency pair is trending. If it's trending higher, we're going to look for opportunities on the long side only. If it's trending lower, we're only going to sell short. We will not enter long in a downtrending market. In other words, we're only going to trade with the trend. If there's no trend, we're not going to attempt this type of technique at all. Okay, this is strictly for trending markets. So let's take a look at how this might work. Obviously, once we've determined the trend, we're going to switch to the hourly chart to determine the entry point. If we're in an uptrend, we'll go long if the price falls back down to support on the hourly chart, or if an oscillator indicates that the pair is oversold. Just reverse this for a downtrend. If you're in a downtrend, you're going to sell short when the price rises up to resistance on the hourly chart, or when an oscillator indicates that it's overbought. So let's take a look at the chart and see what this looks like. I'm going to show you a daily chart first, and this is the Aussie US dollar. You can see very clearly it's in a really strong uptrend. So obviously, we're only going to search for long entries only. Okay? But this doesn't tell us where to enter. It just tells us the direction in which we want to trade. In order to pinpoint our entry, we're going to have to go to the hourly chart and look for some type of a pullback. Now, on the left of your chart, you can see an area that was acting as resistance previously. You can see that the price hits that area, it falls back down, hits a few more times and falls back down before it finally breaks through that resistance. Once resistance is broken, it becomes support. So you can clearly see here, about in the middle of your chart, the price breaks above resistance. Now that area is support. The price moves higher, trends higher, of course, because we are in an uptrend on the daily chart. We do know that. And then we get our opportunity. The hourly chart, the price falls to that area of support. It used to be resistance, now it's support. The price falls to that area. That's your entry point. The beauty of this technique is that you are trading in the direction of the trend, but it does not allow you to enter at the high price. It forces you to wait for a better price to enter. So obviously, if we enter there at that prior support, at that support level, what happens is the trend reasserts itself. Essentially, that's what we're going to assume. You see, trends tend to continue for longer than we expect they will. And trends are littered with people trying to step in front of them and pick the top or pick the bottom. It's a loser's game. You don't want to do that. You want to trade with the trend. And this is a technique for entering in the direction of the trend. So you're trading, again, you're using that trend, you're putting it in your favor. You're assuming that it's going to reassert itself. What you're looking at now is a chart of the US dollar, Canadian dollar, and it's in a strong downtrend. And you can see that obviously by the trend line on your chart. So if we're in a strong downtrend, we're going to ignore any opportunities to enter long, and we're going to search for short entries only. I want to tell you that, it is possible to make money by bucking the trend. But I'll tell you what, it's not easy money. It's very hard money because the price tends to sort of crawl and fight its way up. Whereas if you're trading with the trend, it tends to be easier. It's faster. I would compare it to the difference between trying to swim upstream and swim downstream. And if you are fighting the trend, you must keep in your mind, you have to keep that stop very tight because you know that at some point, it's very likely that that trend is going to reassert itself and that very strong movement in the direction of the overall trend is going to reappear. So back to the chart here, we have the strong downtrend, so we know we only want to sell short. So then we'll look to the hourly chart and try to pinpoint our entry for dollar Canada. So obviously if we want to sell short, we want the price to come up a bit so that we have a favorable entry point. And in this particular case, you can see that the price does rise enough that RSI, which is the relative strength index, gives me an overbought reading. Now, an overbought reading, just so, if you're not familiar with RSI, it's the relative strength index. I'm using the 14-period RSI here on the hourly chart. And when that RSI goes above 70, it's telling me that this currency